All right, so welcome Maureen McCann from Spartan Invest. My name is Seewing from the University Network, and we have a very, very great topic to discuss with real estate investors out there and potential real estate investors that want to enter the game. So the topic is now the best time to invest? Skyrocketing rents, steady appreciation equal good times for real estate investors? So before we proceed, what do you think? What do you think of this topic? I mean, what are your thoughts?
Well, let the good times roll, right? I think the biggest question in everyone's minds right now is where to put their capital. And you could be getting, pulled in 1,000 different directions, from cryptocurrencies to commercial real estate to residential real estate to gold, silver, palladium, uranium, whatever. It is, where do you place your capital today? And you want, and if anyone is awake on this call, they will recognize that we are in inflationary times, and it might even increase a little bit more before the end of the year. So you need to find inflation-proof investments. And if you can buy an investment property and lock that rate in for 30 years fixed, it never changes, and then you have rents that are escalating over that time period that you own that portfolio, it's an excellent hedge against inflation, especially when you add in the appreciation piece of the real estate too. So I'm excited about this topic because rent escalation and coupled with capital appreciation, we're good to go.
Yep, exactly. So once again, something, Maureen, what you just said is something you and I has gone over multiple times, and we have to ingrain this philosophy into the brain of those investors because we are so passionate about it and we believe it, we experienced it, and so hopefully.
And we have to help investors block out the noise, right? We have to help investors really clear out all the noise and listen to things that just have been proven to work, especially in times of recession, or in hyperinflation.
Absolutely. Let's cover that. I believe, once again, the topic is, let's share the screen. And right now, in my personal opinion, right now is the best time to invest for real estate investors, for potential landlords. All right, so here we go.
Here we go.
Yep, due to rising prices and rising mortgage rates, it has becoming making home ownership unaffordable. Right now, there's a 40-year, in the past 4 years, we have never seen such lack of home affordability. It's just amazing. So what does that mean? Well, that means, furthermore, inflation, it has hit a 31-year high mark. Right now, the adjusted, CPI, Consumer Price Index, recently, a few days ago, as a matter of fact, has increased to 9.1%, Maureen, in case you have not heard. So a few months ago, the inflation rate were a mere 8.5%. Now it's 9.1%. Now this is the official inflation rate, and but unofficially, if you go shopping lately, groceries or otherwise, it feels like inflation rate is way higher than 9.1%. So it's hurting us on a pocketbook. So as a real estate investor, I say this: if you look at the past inflationary times, real estate investing, real estate increases in value during inflationary times, right? I think I showed you the graph on our previous videos. And also the rent also rises. If the rent rises, risk investors will get more cash flow. So let's discuss about it. Let's talk about why, in my opinion, and Maureen, I believe your opinions as well, right now is the best time to buy rental properties. All right, here we go. Let me share with some more data. Again, now, as a real estate investor, you have to understand that recessions over time, over many decades, real estate has stayed strong through the recessions, according to the Case-Shiller Index. As you can see, the only time the real estate has gone down in value was during the 2008 real estate crash. All right. So with that said, so again, put yourself in the shoes of an investor, right? And since because of a skyrocketing home prices in the past 2 years and inflation and people can't afford to buy homes anymore, they have to rent. So, and there's a lack of homes to rent. So if you look at the total single family rent changes throughout the country in the past year or so, look at some of the regions of the US where the rent has increased. Look at South Florida. I mean, the rent has increased by 40%. Look at Central Florida. The rent has increased year over year by 25%. Phoenix, Arizona, double-digit increase in rent. You look at the some of these rent ranges. By the way, these monthly rents on different markets, I believe those are apartment rents. I believe some of them are A-class apartments, some are B-class apartments. But you can see the rent, the monthly rent is very, very high in those different markets. But Maureen, you and I, our business model is such that we sell our investors turnkey properties, mostly single family homes. Now, single family homes, typically the rental range are higher than the monthly rent that you see on here, right? So that really are very important for us to understand, right? Even though the skyrocketing home prices we have seen, but the rent, the skyrocketing rent is slowly catching on. I'll give you some more data a bit later on this presentation. So, so what are your thoughts? What have you seen, Maureen? What about in your market in northern Georgia, in Alabama, and Tennessee? Have you seen rental rates increase quite, substantially in the past a year and a half?
Significantly, and they will continue to, because as the values rise, the rents rise behind it. There's a lag. So it's funny. The one thing I was thinking of is everything goes up, including rent, except for your mortgage payment. That doesn't go up if it's 30-year fixed, right? Mm-hmm. So yes, we've definitely seen some double-digit increases in our rents a bit as well, but they're still affordable to our clientele.
Yep. So, all right, let's look at this graph. Okay, over the past 15 years, as you can see, the graph shows the rental increase around 4%, right? In line with inflation over the years until, as you can see right here, from 2020 until now, the past 2 years. Look at the graph. I mean, when vertical, the rental increases like the skyrocketing went vertical from a typical 4% into 12, 13, 15% or more, which is very, very dramatic. Again, there's a lack of homes to buy and there's lack of homes to rent with the inflation. So the landlords are raising their prices. We're seeing bidding wars by renters. I'm seeing in my market in Florida, in North Carolina, in Texas, and in your market, I'm sure your property management been telling you lately, right, that there are like 20, 30, 40 rental applications for per house to rent. I mean, people are lining up over the place to bid. Before there's a bidding war for buying a home. Now there's a bidding war for trying to rent a home. So what have you seen in your market in terms of the rental applications, in terms of the renters out there trying to find a place to live?
Well, I will tell you, our average days to fill a property is 20 days. And the number of applications that we get, we've had to actually hire more people to help us process the applications. So it has increased significantly. And I like this chart. It's really interesting to see. And I want to make a point to the viewers, the listeners, the investors. if you look at this, between 2021 and 2022, you see an increase. I think it says 13.7. My glasses can't really see it, but I think it says 13.7%. Okay.
Right.
And then if, let's just say, you were an investor that believed all the headlines and you decided that you didn't want to do this. It was too scary, or the interest rates were too high, or the price points of the property was too high. Remember, you only have to come in with 20% down on the investment property. And if you chose to make the investment last year, you were earning more in rent than was even expected or probably presented to you under pro forma. And so if you sit outside and don't get your money in the game, you don't get to win. You don't get these 13% increases, 15% increases. You get nothing. And you have to make your money has to make more money, your money has to beat inflation. The return has to be higher than inflation. And I would love to I wish this was a live, we could interact with some of the audience members, but just ask them, where right now in July of 2022, where are you getting a 13%, 15%, 20% rate of return on your money? Just where?
I agree. We will talk more about it in the subsequent slideshow. All right, so let me continue. Very well said. According to this business journal, the U.S. rent prices is highest in decades, and they aren't coming down. So, yeah, the rent will continue to increase for years to come, decades to come. In fact, between 2020 and 2040, the next 20 years, there will be 9.3 million net new renter households, a 21% increase. So this means, Maureen, that you and I are in this business, that when our real investors buy rental homes moving forward, you're going to have some great tenants. You're going to have multiple tenants try to, just knocking on your door, begging to rent your house. So that's what we want, right? As risk investors, we want to have a high quality renter that gonna pay our mortgages, pay our monthly expenses on our rental properties, so they can make us rich. So that's the reality of the game. So
yeah, on the one side, there's a need of renters for housing. On the other side, there's a need of investors that are looking for creating generational wealth or accumulating wealth for their family. You and I, we just bring the two together, right? There's specific needs that are out there in the market, and we deliver them consistently.
Absolutely. So the rental market is great for risk investors. Right now is the best time to pull the trigger. So now this comments are really, really important. So we are becoming a renters nation. Now, let me go through the bullet point. Then, Maureen, I'm going to ask you once again for your thoughts.
Okay.
So what does it mean to be right now is the greatest, we become a renters nation. There's more renters now than ever before in history, as far as I'm concerned. We discussed the bidding wars from renters. 30 to 40 rental applications per rental house is not uncommon. So right now, the cash flow may not be that high, but it'll be higher, clearly, because, and then we're getting some very high quality renters. The renters are staying in longer, although they typically sign 1 year lease. Many of them have been staying 2, 3, 4 years at a time because they can't afford to buy a house. Right now, 40-year low affordability, historic. Inflationary or recession times will cause more people to rent. We discussed that. We're not going to discuss too much about the numerics, even though you and I have done recent videos on a deep dive about we're getting higher cap rates, higher cash and cash returns, higher rent to value ratio, higher total return on investment. And then again, now is a great time to be a risk investor. So what are your thoughts on this bullet points? It's a lot.
It is. The thing is, you have to take all of these. it's like a pieces of a puzzle. Like all these little data points and bullet points, they all contribute and add into something that we just happen to be involved in because we've understand and had success ourselves in investing in real estate. And you and I are very passionate about helping others get this information, figure it out for themselves, quiet out the noise, push the noise out. Really, there is so many negative headlines that I even got in the last week, I went down the rabbit hole and I started not feeling very good about things, right? I was kind of feeling a little blue, a little depressed, right? Because of all the sensationalism. And then I had to just stop it, turn off the mainstream media, and really focus on what is best for me and my family and my business and my investors at this very moment in time. And you and I both agree, push the noise out because the noise paralyzes you. What you need to do is really sit down and look at what do you want long-term. All of us just want financial security. We want financial freedom. And the way to do it's not going to happen by working at a job 9 to 5. You need multiple streams, multiple streams of income. You've heard this term before. And maybe some of you are just scared to actually do it because the interest rates are too high. Am I buying above market price? This all seems so scary. And we get that. And this is why Seewing and I do these types of short little informational videos for you is because data does not lie. Real estate has been tried and true and proven. And yes, you may not get as higher the cash flow that you want now compared because the interest rates are higher than you did before. But man, you get the appreciation, you get the cash flow, you get the deduction on your tax schedule, you get the hedge against inflation, and you get the loan pay down benefit. When you add all those things up, it really kicks inflation's butt. Honestly, it really does.
Yep, we can discuss that in the next few slides, Maureen. I know you're a little bit ahead of the game, which is great. I could not agree with you more. So hold that thought. Let's get back to the sharing the screen. And very, very exciting. So then, look, again, Maureen, you said, when people look at the YouTube videos, when people look at the news media, when people look at the internet or the local news, whatever, you realize most of those information are about primary home buyers, right? Owner-occupied buyers. They never talk about what is what is a real estate investor? How do they create their criteria, right? Mm-hmm. So that's why, and then you and I, Maureen, we're filling the gap. We're providing real estate investor education in a way that is really not done by any other real estate organizations. I mean, Maureen, I'm sure you agree. It's just that I do a lot of research. I look at YouTube videos for the past few years. I look at the internet, and I am so disappointed that there's so little information. There's so little transparent, real, authentic, realistic real estate property investment education in a way that you and I are doing recently, especially the last few years have been doing, right? So it's really a shame, okay? People getting there's so much inaccuracy, there's so much misleading information out there in the social media, in the mass media for that matter, right? So we can only do so much, Maureen. You and I, there's only two individuals, right? And we doing our best to impact the people within our space, right? So that's my frustration, but at the same time, you and I keep doing this video presentation because we can impact one more real estate investors out there to take action. Then, at the end of the day, that's great. It's just we have a sense of accomplishment, right?
Seewing, I'm going to stop you. I'm going to ask you a quick question. So I know you've done this for a long time. Same here. Think about, and maybe even share with the group, someone that you helped and how you've changed their lives because they believed in you and they believed in investing. Just share what some of those conversations are like. I've had them too. When someone who was brand new, didn't really know what they were doing, they actually trusted you, they made the investment. how did their life change financially?
Well, first and foremost, you and I, right? I know you long enough to feel this way, that real estate investors out there they're not a number. To us, to you and I, they are a person, a parent, a family member. They have, they struggle throughout their life. Not struggle financially, but there's so many challenges, right? They have family, they have children, they have their job to take care of, and so you and I get into a deep dive into people. We help people. The numbers and the analytics, all that stuff, they're fine. They just validate everything else. But so all I say is, I don't know how I'm going to answer your question. I'm going to answer it in a philosophical way, right? So we just need to care about people out there, right? People does not care how much you know unless they know how much you care about them. So you and I have this caring. That's why I enjoy working with you. We are people-based. We are relationship-based. So I know we have thousands of investors on my database, similar to you, but the few out there, the small percentage that they're motivated, don't want to reach out to us. We just hold them. We just understand what their personality, their background, and all that, and just try to, just try to be as personal as possible, and just inspire them and motivate them to do what's right for them financially. And so they're not just a number. So when I engage in a conversation similar with you, so we ask them, what is your financial goals? What's your motivation behind your real estate goals, right? Why are they important to you? Tell me more about your financial challenges. What is your background? Why you want real estate as a potentially wealth building tools to impact your families, what's your life, those kind of things. It's just and most real estate investors out there, they don't do these kind of things. They don't have a personal relationship with their investors. They just sell. They are marketers. Look at the YouTube real estate videos, clickbait. They just want bodies, numbers, clickbait, subscribers, and sell. They don't care about individuals, right? So you and I, and you personally, Spartan Invest, you guys have the great model. You hold the client's hand, you build long-term relationship, similar with my network, real estate network, same thing. So we, so and it's a long-winded answer. I don't even know whether I asked you to answer your question.
I wouldn't expect anything less from you, Seewing.
We can go on and on. Okay, we discussed it. Let's continue. Okay, let's go over the rest of our presentation. Now, again, a primary home buyers, a owner-occupied buyer out there, they focus on payments, their monthly payment, right? When they do a loan approval, or the loan approval, the mortgage approval tell them how much monthly mortgage they can afford, right? Those investors different, right? Completely different mindset, yes. Completely different criteria. So let me discuss, you and I discuss the mindset of a primary home buyers, an owner-occupied buyer. They look at the interest rate, they look at the payment. For example, if they have a current house of $500,000, and if their mortgage is 3%, most likely they're gonna have a lock-in effect. Now, if they want to move up buyer, if they want to move up to a higher price home, let's say a $700,000 home they want to buy to occupy, but today's interest rate, let's say, is 5.75%. There's a big dramatic increase in interest rate, and their payments goes from $1,054 per month, the principal and interest mortgage, to a whopping $2,600, more than double the mortgage payment, right? That's how a primary home buyers look at things, right? But as a real estate investor, well, very, very different. The difference between primary home buyers and real estate investor is, again, owner-occupied buyers, they buy based on their monthly payments. A real estate investor buys based on the rent to value ratio, cap rates, and positive cash flow. So what does that mean? That means let's look at two sample pro forma. By the way, this pro forma come right out of your Spartan link. Okay.
I know this property. Yep.
The two properties, right? The cookie cutter property, one is a resale properties, a typical price that you're promoting within Spartan Invest, single family home, resale property, all turnkey, all rehab. Typically, anywhere from you guys sell from anywhere from 120K to 180K resale homes. In this case, 147,000, right? And before I go over the numbers, by the way, we're not going to go over the numbers. We don't have enough time, for a deep dive. We have done those videos previously, right? Investors can watch those other videos. The other property you guys promote, and also I sell in other markets as well, or new construction, right? New construction, and this is 230K, right? So this is two case study we're going to use. Again, this case study, we're only going to spend 5 minutes max, okay, because we can't talk forever, okay, as much as we like to. So, investor expectation, Maureen, this is critical, okay? I hope investors can able to watch this 30-minute presentation from beginning to the end. Don't quit in the middle and not hear this important presentation right here on this slideshow, right? Because of skyrocketing home prices in the past few years, and rent are not keeping up yet. Okay. The investor expectation, if you buy this kind of homes, 147K, the rent is only 1,100 gross monthly rent, right? At 6% interest rate, after all the deductions, let me cut to the chase. You're going to have a monthly positive cash flow of $101. Okay, that's fine. Okay, as long as you have any kind of positive cash flow, that is a good deal. Okay, now I have more to say. Maureen, you and I can have more to say. Just on this new construction, 230K, the rent today, conservatively, are $1,300, right? At 6% interest rate or slightly lower. If at the end of the day, at 25% down payment, you have monthly cash flow of $32. Okay, I know investors, I know what you're thinking. Oh, $32 monthly cash flow, that's nothing. I'm not gonna buy this. Hold your thoughts, right? Don't jump into conclusion, right? And because all the skyrocketing rent that you and I have been discussing on this presentation, 10, 14, 20% rental increases. I know depending on what market, but those rents that we're talking about, they're gonna lag behind the current skyrocketing prices. You will not really see the full impact of those rental increases, as far as I'm concerned, maybe 2 to 4 years from now, maybe one to 4 years from now, you will see the impact of those rental prices. So when those impact of the rental prices are going to impact the houses that people buying today, this $100 will no longer be $100. This $100 monthly cash flow on the first year, in the subsequent year, could be $200, $300, $400, right? On this resale home. On this new build, same thing. You're getting a measly $32 today. Fine. Get in the game. Buy this property, and once the rent lag catches up, you could have $200, $300 monthly cash flow. But then again, cash flow is just one component of a real estate asset, right? Maureen, you and I have gone through this. I know here are we're not going to spend one more hour on this, the 10-year projection. We went over that on another video, but from a high level, in fact, I'm going to have you discuss this. The key is not the first year projection. Yeah, the key is year to year, from 1 year to 5 year to 10th year and even beyond. This software, this slideshow only talk about 10-year projection. I mean, as a risk investor, you need to buy and hold hopefully more than 10 years. But okay, before I'll let you go through your perspective. Let's there are 2 slides, right? Again, I'm only going to allow you 5 minutes, maybe 7 minutes. Usually take 1 hour, right? So I have 2 slides. The first slide on this one sample property, we talk about 5% annual appreciation rate, 5% rental increase from year to year. So look at the gross rent increases, and we're going to talk about, the annual rent increases, right? Cash flow going to increase. And then the second slide, which is very, very important, it shows the increasing numbers. Appreciation will increase. Capital rate, cash and cash return will increase. Return on equity will increase. The market value of your homes will increase steadily. The loan balance will decrease. Equity will increase over time. You can cash out refinance your property to buy more properties down the road, and all those things. So go ahead, Maureen, I'm going to allow you to recap this 5 to 10 year projection, why this is so critical, why most real estate investors, whether you're an experienced investor or a newbie, do not truly understand the value of look at the projection and the numbers from 1 to 10 year and beyond, not just the first year projection to make your decision to buy a rental property. Go ahead, Maureen.
The reason not to look at year 1 to make the decision is because you're limiting your viewpoints on all of the ways that you earn. And if you don't even have your money in a property like this, then you don't get the earnings on the home equity. You miss out on the earnings on the increases in rent. And by the way, you control that. You can control the increase in the rent. That's a beautiful factor that you can control in this whole formula. So if you don't do this, if you did not buy this house, you would not be the winner of these 5 ways that real estate pays you, from the increased cash flow year after year, from the increased appreciation year after year. And yes, there's some dips and valleys and stuff, but for the most part, it's a continuing incline. You would miss out on the principal pay down that your tenant is paying for you. You would miss out on the tax benefits that you get, and you would miss out on your money hedging out inflation. That's if you didn't do it. But if you did do it, this is what Seewing and I are trying to explain it through this. And I love this 1 to 10 year. You cannot make a decision today on an asset that you are going to hold for 5, 10, 15 years or longer. You have to look at the long-term play. That's why it's called a long-term buy and hold, not a short-term rental. There's a difference between the strategies on the 2. And so just think about this, guys. These numbers are nice. The data is nice. You've heard Seewing and I talk about this multiple times. We know that you have to hear the same thing over and over again. I now in this quick hit world of social media, our attention span is very short. And so you have to hear the same thing 22 times. There's data that says you have to hear the same thing 22 times in order for it to land.
Maureen, what's my, sorry to interrupt you. You know what's my definition? Quote unquote, repetition is the mother of all learnings. Repetition is the mother of all learnings. What does that mean? That means this presentation, guys out there, you might have to play this video more than once. Go ahead, Maureen. Sorry to interrupt you. I would agree.
I think it's a great point, because let's just I learn Seewing, this is what I do. I watch videos, I stop, I pause, I take notes in my notebook, I hit play again. If I missed it, I rewind, because I don't want to miss the wisdom and what someone is trying to share with me, because they know something that I don't know, and I want to learn it and understand it so that I can benefit from what they're teaching, or my financially, my family and I, and my investors. I mean, I even take it out to my investors. I keep learning just like you do, so we can help investors figure out ways to build their wealth. And you and I just, our little niche is real estate. Someone else could be talking about cryptocurrency. Someone else could be talking about oil and gas, right? There's opportunity everywhere. You just have to figure out and decide where you want your money to go, something that you understand. And the only way that you can understand it is if someone actually takes the time to teach it. And this is what we do for free on the call, right? We just care about getting the right messaging out there. And we're not charging. I know classes out there that are charging $5,000 to $10,000 to teach you the stuff that we're teaching here for nothing, right? Doesn't mean it doesn't hold value. It has a lot of value. We could charge, but it's not worth it to us. It's what, for us, it's about getting the right content in your mind, inspiring you and encouraging you to take action, because all those beautiful numbers that Seewing showed on the cash flow increasing from $13,000 first year to over $20,000 on year 10, you don't get any of that if you don't get in the game. We're just helping you get in the game by giving you the right tools. That's it. That's all I got.
Absolutely, Maureen. Well, very well said. So I'm gonna finish up. We only have about maybe 7 minutes left. So let's go over something that you and I, we need to ingrain this into our brain, which we already have. It's a matter of us, integrating this into our investors' brain. Is that rental property is history's most powerful and most proven, historically multi-dimensional asset class, is the most taxed favored asset class among any, comparing to any kind of assets over time in the past, whatever, 100 years. Rental property always beat other investment class because they're all up to 5 dimensions. You and I discussed this. Up with multiple ways to make money. Again, can you go over this income depreciation, equity appreciation, and leverage?
Yes. All you got to do, remember, guys, if you can remember this slide, this will be your motivation to take action, right? Yep. Real estate pays in 5 ways. 5 ways. It's better than any other class out there. You earn from the cash flow or the income produced from the property after all your expenses are paid. 2, it's a vehicle to reduce your tax liability, which is the biggest bill that we have while living in the United States. So how do we legally, legitimately reduce our tax liability? And that is by providing housing as landlords to renters, and we can write off those deductions on our tax schedule each year. The assets that appreciate. There's 3 things you need to do buying, to build wealth. Buy appreciating assets that cash flow and reduce your tax liability. I just nailed those 3 up front on this slide here. Then you use the beautiful tool of leverage, and you use it responsibly. But you use the beautiful tool of leverage to just put a little bit in to acquire a high dollar value asset that then you get to earn the appreciation on this part, not your 20%. You earn it on the total value of the asset from equity growth. And you set your fixed mortgage payment for 30 years and ride the rent escalation over that time period. And when you add up the 5 ways that real estate pays you: cash flow, appreciation, depreciation, principal pay down, and using leverage to acquire these assets, using just a little bit money down, that has been a winning formula for hundreds of years in the United States.
Exactly. And then, very well said once again, and this is the final slideshow. This is the action plan. Notice I say the word action plan. All the education you get out there, investors, means nothing. You do not need a PhD in economics. You do not need a PhD in real estate. You just You just got to take action. I mean, you can't learn
Yes.
forever.
Yeah.
Right. Yeah. So I'm going to ask for your input again as we recap this presentation. The all important action plan. Let me go through the bullet point, then I'm going to have you finish up verbally. The action plan today is to buy your investment property now. Yes, now, not yesterday, not tomorrow, now. Even at whatever the interest rate is. Right now could be 5.5% to 6% for real estate investors, 30-year mortgage. Okay, don't be afraid. It's not all about interest rate. It's about many other things as we discussed. Because when you buy a property, even with the higher interest rate, even with a relatively low initial monthly cash flow, guess what? Meanwhile, you are enjoying the equity appreciation. You're enjoying the small monthly cash flow accumulation over time. You're enjoying the principal pay down from your renter. You're enjoying the tax benefit. You will achieve a slight positive cash flow with 25% down. Once, and this the last two will be very important, Maureen. Very, very important in this presentation, in this current environment. Once and if the interest rate decrease in the future from whatever rate you're paying, you can always do a cash out refinance for a lower rate, right? And as we mentioned earlier, in about 2 to 4 years, or even 1 to 4 years, the lagging rental rates will catch up. So you will achieve higher cash flow. So with that in mind, Maureen, share with us what is your takeaway on these 5 bullet points.
Mm-hmm. These are solid. These are really solid. I think a lot of investors, if they're listening to this, they're thinking, what's my next step? Your next step really is to find a lender, get pre-approved, get yourself pre-approved so that you can get in the game and start enjoying these 1, 2, 3, 4, 5 benefits that Seewing has pointed out here. I know sometimes it can kind of sound like a little sales pitch, like take action now, or you're going to lose out, right? We know what you're going to lose out on. And this is why we're saying, you know, if you bought a house 12 months ago, maybe you were one of those new investors that started 12 months ago and you got the courage to take the action and you did it. And that $100,000 house that you purchased increased 19.1%, which was what the National Association of Realtors equity growth was in the United States. So your $100,000 house just appreciated to $119,100, and you only put $20,000 down, right? So that's almost 100% rate of return on your money. And I know that sounds crazy, but that's what real estate does. That's what the power of using leverage, locking in at a specific interest rate. You get the capital growth, the equity appreciation, the monthly cash flow, the renters paying down your principal. You're getting the tax benefits. So if you don't, you just miss out. But if you do, then, and even if it is today a higher interest rate, so you're taking less cash flow than you would have if you locked in at a 3%, you always have the tool. And think about this, the banks give us the tool of the 30-year fixed note, and we can refinance at any time we want for a lower rate and just reset the clock. It makes the banker happy and it puts more cash flow in her pocket, but it's a tool to acquire the asset in the first place. So get pre-approved. We've got a list of pre-approved preferred lenders. That's where you get started.
Maureen, let me say one thing I forgot to say. Very, very important. Is there anything I said is not very, very important? Anyway, very important. What if you buy at your property today, whatever price you're buying, in the next 6 months or a year, maybe the value of your rental property decrease in value, 5%, 10%. Do you really care? No, because you're collecting rent. The renter is paying down your mortgage and all your debt obligations. You're still making other ways of money. And again, as an investor, you buy for long term, right? You stay the course, right? And real estate will go up, will go down a little over time, depending on whatever. But if you invest on a 10-year time frame or longer, it always goes up. And one more thing, 10 years from now, maybe even less, 15 years a year from now, when you know the value of your house at that time, you're going to forget the price that you bought today, because all the money you made over time on this just one property. So that's my wisdom. That's how it is, man. You just go ahead, Maureen, finish.
Yeah, no, that was an excellent point, right? Because the rents are zero, are unaffected by the value of the home. As the value of the home fluctuates, the rents continually increase year after year, is what history has shown. So it doesn't matter if the property value goes down, rents is unaffected. Your rent doesn't change that same year that the property value goes down. The rent's still the same or increases year after year. So excellent point, Seewing. So I was thinking, the challenge would be for any of those skeptics that are out there, prove us wrong, challenge us, right? Call us up and say, hey, I'm going to put your content, your information, what you shared into action. I mean, I'd love to, this is what I do with my investors. We have report cards. We track them, however long they've been with us. We track them to see how well their portfolio is doing. And how great does it make us feel when we can go, look at how well you've done. Look at where you started. Look at where you are now. And by the way, I'll end with this story very quickly. When I asked you, what's the biggest, one of the success stories is I met this couple. His wife lived in the Bay Area. She was commuting, I don't know, it was like 2 hours a day to and from work. She was exhausted, tired of her job. They bought 15 houses. His goal was to buy enough properties to replace his wife's income. And they did that in less than 3 years. And that's the thing. That's the power of real estate, what it can do for you. You just have to figure out what your goal is. And then Seewing and I can help you figure out how to get there and how many properties you need to get the cash flow you need to grow your wealth and then to achieve whatever that goal is, whether it's retiring your spouse from work, retiring you from work, paying for college for kids, paying for future travel, whatever it is. But you need a plan and a team to help you.
Maureen, I'm gonna say one more thing. Now, this video would be saved in an archive, on my YouTube channel, right? I mean, right now is July 2022, right? And for those of you that are taking action as a result of watching this video, great. You can go through your journey. In the next 5 to 10 years, we can talk about what transpired. Now, for those of you naysayers out there, your negative people out there, and there's way too many of you, you continue to stay in the sideline. Just compare this video today and the graphic that we show and compare to 5 to 10 years later. We'll be around, Maureen and I can be around 5 to 10 years.
We're not going anywhere.
And we will see, the action takers will reap the benefit. The negative people out there will, live into their negative financial story. Just stay on the sideline. What if, I should have, could have, would have. I've been hearing that for the longest time in my 20 years of real estate investment business. That's the way it is. Which side, you want to be at. You can be on the positive side or the negative side. You can be the one that take action or the one that always, have excuses, right? And never do anything, stay in the sideline forever. So, that's, you have to understand, you have to be in the winning side or the losing side. Okay, that's, I hate
find excuses or find reasons to take action. It's true.
You can make money or you can make excuses, but you cannot do both. All right.
Wow, good job, Seewing.
We can talk forever, but again, I mean, I know hard to make such a long video, but it's so much powerful. Maureen and I need to say, hopefully you guys are inspired by this. Hopefully you guys are just just motivate yourself. Just and take action and take some risk, take action, and work with us, work with my organization, or work with Maureen if you want to. You don't have to, right? You can go out there and do something on your own. All right, so that's all I have to say. Thank you so much, Maureen McCann from Spartan Invest. You've been such a your perspective is so helpful. It's just so amazing working with you. So thank you for your help. All right.
You're wonderful, Seewing. Thank you. It was my pleasure.
This is Seewing Yi from the Yi Wisdom Network. I will see all of you on the other side. Have a nice day. Good luck. Bye.